Thanks for joining us for this afternoon's market session here at the Red River Farm Network building. I'm Sierra Doctor, one of the broadcasters on the team. At the end of the stage here is Don Wick, also one of my fellow coworkers. Randy Conan is up on the stage. He just gave the markets. And Whitney Pittman is wandering around. She'll have a microphone. Jay Rader is also part of the team. We want to encourage everyone to ask any questions you might have during the panel. We want to hear from you as much as you want to hear from us. So if you have a question, be sure to raise your hand or catch the eye of Whitney or Randy, and they'll get you a microphone. But I'll let Don go ahead and introduce the rest of the panel.
We've got a rock star panel for you today, and we're excited to have you here to talk markets. There's always a lot more fun to do this when the market closes higher, when Randy's got some plus signs on that screen to be talking about. Let me introduce our crew. Tommy Grisafi with us from Advanced Trading. Tommy, thanks for being here.
Thank you.
Christy Van On from Van On & Company out of Alexandria, Minnesota. And making the way from Wisconsin, Brian Doherty with us, Total Farm Marketing. Again, we appreciate the three of you. You're heard on our airwaves a lot, and we great to have you here on our stage here at the Big Iron Farm Show. Of course, yesterday we had a crop report, a lot of attention on the September report, finally get some boots on the ground and see what is out there in that field. I think trade expected yields to go down a little bit, which they did. They found a lot more corn acres than I think folks were expecting. In corn in particular, we're still looking at what, 2.2 billion carryout. That seems pretty hefty to chew through. Tommy, what's your take on this report?
It's we have to come to realization that I think if you're an American farmer in an area that had a problem, you think the USDA is lying, but really the price of corn and the lower grains overall, the wheat market was kind of telling us the big bull market was over, even though we don't want to admit it. So when wheat kept making contract lows, sometimes I look at all grains as a bundle. The price of corn plus the price of wheat plus the price of beans, and they haven't been going up. I have a lot of customers who have a little short crop and they're really mad and upset. But the world markets, when you keep corn massively above the cost of production for years, the world's going to find extra corn, or they're not going to be able to afford that corn. And the mathematics of any business that's massively profitable, you're going to have competition. And so the competition finally got ahead of itself. Regardless of how we came to this number, I guess the point I would pass to the crowd, or that, one of the other folks on stage, is how big would this crop have been if we had really nice August rains and a little bit cooler in July? I mean, what would we be looking at as far as a carryout? So it's just amazing to think what's happened to these genetics. And if you walk around the farm show, every one of these seed dealers is going to tell you how awesome their seed is. No one's selling the bad seed here this year.
I can tell you that.
Last year they had a bunch of them, though.
Yeah. Well, Brian, you and I talked about that. I picked you up at the airport last night, and we talked about this drought and dry weather. But boy, it's a testament to genetics and what these farmers here are doing each and every day.
It's not only genetics, but it's good farming practices and good farmers. All of those have been on an upward sloping curve for a long time. It's an army of people behind the farmer helping to support him and grow those type of crops as well. So there's a lot of credit to go around, but it's a little bit of luck too. This year's crop, we had some very timely big rains pushed through parts of the Midwest. So the big word this year is variability. And so for a lot of the yield, we're not going to really know until we get into the field. And the yield is, according to the USDA, still a little bit larger than last year. Tommy talked about the world market. Brazil's production up about 800 million bushels over the last 2 years. And ironically, our carryout is up about 800 million bushels. So It's funny how those economic forces do come into play and sort of get prices to a level now where it's a bargain to the end user. When I say a bargain, that is they can buy corn for less than it costs to grow it. So end users should start to step up to the plate. Over the last decade, we've noticed that the harvest low has come either in August, September, or once on October 1st, and then the preceding rally is in 50 to 60 cents. So I don't want to overpromise here, but it does look like the market's trying to carve out a low.
Mm-hmm. You know, we talk about the harvest reports. We've been keeping one ear on the ground for a lot of these crop tours as they've come through on the summer. And it seems variability is the name of the game when it comes to a lot of these fields. Do you believe USDA when they came out with the harvest numbers?
The harvest numbers as in acreage numbers, I think I do. We got to go back to last February. The insurance price was $5.91, and prices tailed off very hard the first 2 weeks of March. I think there was a strong incentive for farmers to push corn, insure heavy, and see where the dice kind of land, and this is where they landed right now. More acres and a yield that's, to Tommy's point, scary if we get to the trend line. Some weather adversity obviously took us down to where we are now.
I think we need to bring the rose between the thorns here into the conversation. You were on the Pro Farmer Tour, weren't you? What
2
did you
years ago, I
see?
went on Pro Farmer Crop Tour, and it's a heated discussion. It gets a lot of attention. When I went on Pro Farmer, I thought it was actually a really great experience. When I look at the computer and I am seeing how you look at technical trends and everything, I learned so much about the agronomy side of things. That was real eye-opening for me. And so, it's not manipulated. People you plot your routes and you're stopping and you're finding these fields. And I think that was the writing on the wall when you started to get those. And my dad has harped in me for so long that planting the dust, the bins will bust, right? And I think seed genetics have done such a great job for drought tolerance. I would be far more concerned on a wet year with mud and shallow root systems than we have going on right now. And it kind of has proved itself over a couple different times that you have some dry conditions, the crop can still be there. From what I've heard, the issues that I've seen the most of from producers going in the field is corn on corn. I've heard that quite a bit from them, so I think that could drag down some yield when you're looking at producers. But overall, if you believe the yield or not, and I was having this discussion with somebody, it doesn't matter whether you believe it or not, that's what the market's gonna trade. But if we wanted to say this yield is actually lower than where it is, the demand side on corn is very problematic. We have a lot of demand built into this carryout level that USDA has an opportunity to flush that demand with a lower yield. So if yield comes down, there's demand to be able to flush out. And I have a hard time believing it's going to take some bit of a story, some increase in demand to get a sub 2 billion bushel in corn, that I'm not so sure the yield even matters at this point. I think our job is not to get a lower yield, it's to find some way to drum up demand.
You know, Brian, you mentioned briefly here carryout and Brazilian soybeans. What are acreage estimates for Brazil? And as we look forward, what is there anything we can do to dissuade them from planting more acres?
Well, okay, I'll address that. So the question is Brazilian acres, soybeans, and then they double crop the beans to corn. So that second crop corn is the safrinha corn. That's their exportable corn. So this goes back a long way. So China has put a strong initiative to become less dependent on the United States and more dependent elsewhere in the world, as well as improve their own crop conditions. So this isn't anything new that's been happening. I remember I started in the industry over 30 years ago, and at that point there were 70 million untapped acres in Brazil waiting to be tapped. The problem was getting infrastructure. China's invested in infrastructure. Other countries have invested in infrastructure. So it does look like that Brazil is still on an upward trajectory to plant more acres of soybeans next year, probably more double crop corn. But the USDA has already taken some of that corn yield out of the projection for next year, anticipating this year is a pretty special crop for Brazil.
Yeah, I think one concern with Brazil is there was a very brief time that U.S. corn was cheaper to China than Brazil was, and it was 10 cents cheaper, and it did not last long. So right now, we just don't have the advantage. Our crop, I know you guys feel like the corn is very cheap, but we're still not cheap in the world market, and we're going to continue to deal with this with Brazil moving forward.
Tommy, you and I've talked about this previously, but we talked about the drought that's also made the Mississippi River water levels go down this year, repeat of what we had a year ago. Panama Canal, it's hard to fathom how that gets low, but the water levels are low there between the two oceans. What's that mean for grain movement? What's that mean for trying to move our product?
Well, it's interesting to see because we recently opened an office in Bettendorf, Iowa on the river. And so I kind of see the boats go up and down. And they're just always going up and down the river. And there's, hold on one second. There's, we move an incredible amount of grain on the river. The Panama Canal, which I learned about, not like I didn't know what the Panama Canal was, Don, but I didn't realize it was fresh water making it go up and down. I had to Google what's the problem. They're like, the water. I go, Don, there's plenty of water on each side, but it's the fresh water inside. That's a problem. They're about 14 days behind right now, and maybe a few hundred boats. But it's going to make the cash market. If you're along the river and you need to buy grain and you can't move it quickly, the cost of doing business has increased so much, and we'll talk about that in a little bit, interest rates, that the folks who are going to buy that grain and store it, they need to put their hand lower because they got to buy it a little cheaper because they have to deal with that. There still is a risk of an end user buying your grain and having to hold it, knowing they don't have a direct ship. What it could mean to our area up here, in particular, is the PNW could become a very hot. So actually, we could go into a hotter cash market, and I think we're starting to see that. And we'll know better in a few weeks. But if you're along the river and you're buying, I have a friend who recently, he bought an elevator, a former trader from the Board of Trade, bought a huge elevator in Mississippi, and the Mississippi clients are absolutely devastated how wide that cash market is. And it's because that river, and he's telling them, I know futures are 475, but I can't move this corn forever. Like, there's no bid down there to move it, and it jams everything up, so it pushes the problem down a little bit.
What's Basis doing here locally?
Yeah, when you look at basis, I think that's one of the problematic parts for me for beans is that up until recently, there has not been a PNW bid. And I think it's been a little bit of a struggle when you're looking at it.
We have a bid right here.
Okay,
Young man,
yeah.
Cargill, stand up.
And
25 under. But right now, for the Farm Big Iron Show, 10 under, call right there.
It's 10 under
All
now?
right.
We moved 15 cents, and that was quick.
It did, right? But what is the local market? Go ahead, stand up. Right. And by far, in all compliments to them, you are one of the strongest buyers of grain in this area. And that is your market, right? We would not be growing corn up here if it wasn't for folks like yourself and the company you own, of course, you know. But and then the PNW. And then we're using it for ethanol here at Castleton. And yeah, it's interesting. But I don't think it's bad. I just think the futures have dropped so much that it feels bad. I mean, it wasn't that long ago what year were we 70 unders for corn and $1? Well, when we started fighting with China, right? That's bad. You go 75 under in corn and $1.75 in beans, and that's a problem.
You know, Tommy, you keep picking on our people in the front row, and they're not going to sit up there anymore.
I know a couple in the back, too. But,
So, talking about river levels, I mean, this is something we saw last year, right? And it was a problem for a while, big topic last year. Do you think that this year we're better equipped to navigate some of those problems? Is it going to cause as much issue?
Well, it won't
Thank
cause
you.
as much issue.
Thank you.
Because we're not moving as much grain down river
Right.
right now. The export market is slow, has been slow, and that's been problematic. But as far as my understanding on barges themselves, you know, there are certain regulations, rules, how much they can load, and I don't think that's changed. But what's changed is just the amount of grain flowing south is smaller this year. Corn exports off significantly, we all know that. Soybean exports off as well. Again, competition out of Brazil.
Talking in that vein of basis and such, when we talk soybeans, we've got a crush plant that's going to open next week at Spiritwood, another one that's being built just down the road that'll be online next year. Obviously, it's going to change the world here in a place like North Dakota. What's that going to mean for our basis? What's that mean for this marketplace in North Dakota?
a great
Yeah.
thing. No one's going to curse it, right?
Yeah,
Except for the local elevator down the street.
I think that it's going to be a gift to producers in North Dakota. I know the grain buyer for the new crush facility in Spiritwood, and I think she's going to be real farmer friendly, and I think that's a gift for the area. I think she's going to be fantastic, and you can already see that she wants to find a way to make it work. So I think their first beans that they're taking is September 20th. And I think, the more competition you have, the better it's going to be for you guys. If there's a crush facility that's wanting to utilize a third of every bean grown in North Dakota, your elevators are going to have to try a little bit harder to get those beans that go to the PNW. The logistics behind that crush facility are actually really neat if you talk to her about it. What they plan on doing with their meal, they're hoping to be able to get a bid off the PNW, but it's also owned by ADM, and so they can utilize that to ship it down to where there's a little bit more hog producers. And I think it's going to be really great. And that same situation, we can see what ethanol plants did for basis levels over that bid. So when you look at kind of basis levels, when I was saying that basis isn't great, I was talking bean basis for elevators. I think the PNW bid's not quite there, but the crush facility is. And I think that's going to eventually help it. And I'm actually pretty friendly basis in the November to December timeframe. I think that end users, elevators are not bought up like they maybe should be. And I think that the price action that we've had over the last year has given a decent cash flow to farmers that once they deliver what they need to deliver and have it in the bin, I think the bin doors are gonna be shut. So I do think that there could be some real great opportunities for both corn and bean basis into this November, December timeframe. And if you look at corn, for example, or even beans, the carry out to your March contract for corn, you're gonna be able to deliver on a March HTA starting in December. Kind of that carry market that's from November to January or the February timeframe, same situation. You're going to be delivering off of that January contract price HTA in December timeframe. So I think those opportunities are really there towards the end of this year.
So Green Bison, obviously, in cooperation with Marathon, that product's going to be going for the California low-carb type market. How big of a game changer is it that we're seeing soybeans now focused in on really the energy business?
Can I grab that one quick? It's more of a world reflection of where production is and where usage is. So South America can produce beans cheaper than the US and more beans for an exportable market. We lose export share. The demand comes into this market for bioenergies, biofuel, and then it diversifies itself out, whether it's California or elsewhere. So it's really, so to me, it's a dynamic world, and you're just shifting players and you're shifting product within that world. The good news is the demand is there. Crude oil prices are approaching $90. There's a lot of upbeat optimism that the bioenergy market will help lift soybeans and make it a competitor to elsewhere in the world and keep our corn-soybean ratios in check.
What's that $90 crude or that territory? What's that mean for us?
It's, I hate to say it, for the average consumer it stinks, but for us in the grain industry, because we can take all the grains and turn them into some form of alcohol or fuel, I like higher crude. I like what it does to the mix. It would be a lot worse if we had $40 crude and these lower grain prices. To add on to both what Christy and Brian said is that when I came up here 9 years ago, people were always like, oh, why would you want to be up here? Our basis is so bad. And they say it's like the armpit of the world, the basis. And you could see it on the DTN map. And one of the things I would say is it's not always going to be like that, because one day big money is going to come up here and build where the bad basis is. And sounds like that day is now. That day is next week. Your friend, she is part of the solution. So what's it mean for you? It's going to help keep your land prices high, because that extra whatever, I don't want to predict what it is, but it's going to be nice. It will always be there. And so the days of going really far under, there could come a time in 3 years where we're sitting here and we could have a better basis than Southern Illinois or Central Illinois if they develop up here. And with the genetics and what we can do with growing soybeans and corn, we can, the soybean belt is called the belt, it's corn belt, but the areas where we grow soybeans are expanding. And it's really great for North Dakota and Minnesota and everywhere.
Good. Don, you mentioned kind of green energy and getting into that. I want to take a step away from the, typical corn, beans, wheat. What about some of these specialty crops? Where do you see that factoring into, say, sunflowers?
I have some clients who still own some sunflowers from last year, and they are beside themselves that when the market wants something and the price shoots up, again, the economics of what Brian talks about, like water seeking its own level, they get hot and they don't get hot. There's times when specialty beans are so hot, they're begging you to take a contract. And sunflowers are, they're not hot anymore. but that doesn't mean they're not worth planting. They just
Yeah.
were, prices were so exaggerated from the Ukraine war that it hurts to sell something for half of what it was worth a year ago, but that might be what it's worth. So I would say our specialty crops are going to have to compete harder against, because there's real farmers in the room. Some of those crops take an incredible amount of work, and those beans, especially those edible beans, are really finicky. They don't like when they get wet, and it could really be a disaster. So you could have a great edible crop, and all of a sudden you have a problem. And it's a specialty crop. Sunflowers, you always hear complaints about the birds eating them and everything else. But I think in a perfect world, as you keep driving up here, flying up here, one day you're going to come up here and you're not going to know the difference if you're in Iowa or if you're in North Dakota, except for your sunsets are prettier and the people are nicer. Iowa people are nice too, but people are nice up here. So pretty much you won't know where you are. Every time I come up here, it's more corn and beans, and less specialty. Although everyone does notice when you drive by a big sunflower field, it's beautiful.
Yeah, I think the old logic of like work smarter, not harder, plays into role with specialties to a degree. The more facilities you have, like the crush facilities or ethanol plants, the ability, the ease of being able to deliver that product when you want to deliver that product and have it so easily accessed, I think beats out so many specialty crop prices. Like you said, you have people sitting on them. I hear people talk about, when I first started, I had almost every producer have soybeans. I don't have any that have soybeans now. And every time I have a producer decide to do soybeans, all I hear for an entire year is how much work it was, what a pain it was, and the damage it did to
Soybeans
soil.
or edibles?
Oh, sorry, I mean
I know.
sunflowers, but yeah,
Sunflowers, yeah.
so every time they
I
have
know you meant
sunflowers.
someone
yeah.
who's a
Yeah.
plant, but-
Sorry, I meant sunflowers. So every time I have
we know
that.
what you meant.
And so I think you look at specialties and they had their moment, but I think now you're coming back to your core corn, beans, and wheat and just how easy they are to grow and deliver, I think wins out for the most part.
Talk about on the energy side, what about ethanol? We've got this big push from the administration on EVs. What's that mean for us for ethanol long term?
Well, we're a pretty mature industry, or the ethanol industry, when I say we, the ethanol industry from a production perspective. So there's only so much you can go, who's building a new ethanol plant. So maybe there could be some incentives down the road, but I think it goes more to the bioenergy and the soybeans. So I think corn ethanol probably maxes out or is close to maxing out. It's just a mature industry, but it doesn't go away by any stretch. It stays strong. The report yesterday bumped up ethanol production and usage. So the USDA certainly recognizes the value of ethanol, but it's not something like we saw 2003 to 2008 where there was just a gold rush and a mad rush. That's turned to the soybean industry now and the vegetable oils.
There was a conference Monday called Next 5 Years Conference in Moorhead, and they had a geopolitical analyst talking about it. He talked very specifically that ethanol overbuilt, that we have X amount of production today and a much lower demand. Do you see that that's a correct scenario?
Well, I'll comment on that because I am familiar with some ethanol plants, and ethanol, when the plant was built for an ethanol product, they made money. This was a Wisconsin plant. They don't make that much money on ethanol anymore. It's the specialty things that come out of ethanol and the corn oil, again, back to the vegetable oil, biodiesels, the grind. So it's become a multifaceted business for a lot of plants that have had to look for other markets and other means to turn corn and distiller's grain into other products as well.
With three experts here on the stage, I want to shift the focus again. When it comes to corn, beans, wheat, should farmers store or sell this year?
Want me to answer the easy questions? No. Well, it's such a hard question to answer because everyone's in a different situation, and we're in a pretty strong financial situation. Sometimes I could say financially on pen and paper with a pencil, this is what we think you should do, but they might do something different. So during the best of times, you make the biggest mistakes in life, at least I have, financially or in other things. When you're at the most confident and the most liquidity, you have time to make a mistake. And I would assume that this room, with how much land prices went up, how much government money has been awarded, and if you don't believe me, I can ask you your name and your county and look you up at EWG, and it's right there. I can also search your name and look at PPP Loan 1 and 2 and see it there. So we could see the money come in, we could see the markets go up, we can see the land go up. People don't need as much money, and I know this because my office, give a shout out to First State Bank in Red River Valley, but my office at the bank, and I met with my banker yesterday on the phone, and I said, how many operating notes do you have are stretched? He said, I don't barely have many operating notes. Like, in the old days, you'd come to this event, and people would be as tight on cash as ever today. And as the grain would come in, they'd pay it off. An incredible amount of operating notes are paid off right now. So buy, sell, store, it's, in the old days, you'd sell for two reasons. And if you disagree, please tell me. You'd sell because you were out of space or you're out of money. And there's an incredible amount of space right now because we just pretty much not ran out of grain, but we were at the lowest amount of stocks for a long time. We built more bins, we have more baggers, all these vendors out here are selling that stuff. And so we're not necessarily running out of space, and I don't know very many people are running out of money. And those are the two factors that people, in my opinion, sell. Not because the right thing or the wrong thing or the three experts. It's I'm out of space and it's going to town, which is you, or I'm out of money because my banker says, you want operating next year? No problem. Come up with 400 grand. And they're like, boom, I sold 400 grand worth of grain. That is the number one reason, not the right reason, why grain flows, in my opinion.
Yeah. All politics are local. It affects me, right? Yeah.
I think one tough thing is that you've started to see some elevators go to cash only for wheat. I think that's been problematic, that they're not even willing to charge you DP on it. So that's put some producers in a predicament. But if you were sitting here and saying corn or beans, I would sell beans, not today. But, you know, you had some really good opportunities over the last month or so. We found support at the 200-day moving average on no beans today, 1334. That was fantastic. And if we got back up to that 1380 to 14, I'd have no problem selling beans. I think the basis is not the best, but if you can get to a crush facility, it is still strong. And like I said, I'm friendly, especially corn basis, into that November, December timeframe, and I'd utilize that. I wouldn't store the crop a really long time, but I think you'll have opportunities sooner rather than later.
You're writing notes, Brian. What do you?
Yeah, my answer is it depends. Okay, so here's my quick view. I think you guys, farmers in general, were really good at selling the old crop into the winter months. You had an inverted market. The market was telling you wanted its grain. You had good prices, but I don't think you sold a lot of new crop. And so I'm sure there's a lot of you sitting here wondering what to do. So the depend part comes here. What's your insurance level? Is there a lot of risk holding corn and not selling corn right now? Probably not if you've got a high enough insurance level. If you're at the 75% level and you have an average yield, you're still not to a point where you're going to collect an indemnity. So that's a factor to think about. Here's another factor to think about, and I know you've all thought about it, but we didn't mention it up here, but interest rates have been on the rise. How long do you store in a carry market with interest rates? What costs 50 cents in 6 months old? It's the cost of storing beans for 6 months, at least. So those are all factors. So for me, I'd like to kind of peel that onion back a little more and kind of figure out, you know, what, this isn't a black or white answer, really. If we're worried about basis levels as harvest digs in widening, maybe you'll tell me they won't, maybe they will. But if you're worried about it, I'd still sell sooner than later and look to retain ownership on paper if you wanted to do that. There's different ways to own other than cash. If we think we're going to get post-harvest basis improvement, which we typically do into the early winter months, then we want to think about that as well. So it's a depends answer. It's not a black and white. Other variables, your cash flow needs, your taxes, other things. So think about talking to who can help most get you to kind of wiggle through those different hoops to figure out how the best advantage for you.
You talk about rising interest rates. You know, yesterday we heard from Betsy Genshin, and she said that farmers haven't made decisions based on interest rates yet because they haven't had to write the check. They haven't seen the impacts of it. Do you think market decisions are going to change this upcoming year when they start seeing that?
The check you write for the interest rates going up, it doesn't come out of your checkbook. Like, it just happens. So it just kind of eats you away, like water going over a rock. You're not going to have to, it's not like going out and buying a piece of equipment and writing the check. They're just going to take the money from you. So they're taking the money from you right now. You just don't feel it. It's no different than you could have sold $6 corn. It's at $4.50. No one wrote a check. So if you didn't sell $6 corn on 100,000 bushels, and it goes to $4.50, no one writes a check for 150,000. It just goes away. So you just end up with less money. So it's going to take a few years because we're so liquid right now. It's going to take a few years for that liquidity to dry up. But one question I'd like to ask, maybe the group or the audience, is with these new crushing plants, that will also change because the crushing plant's not in the storage business. They can't store 3-6 months worth of beans. So the crushing plants, this new world we're going into, is going to ask the farmer to store beans for longer. They're going to have to incentivize them. You know, as Brian had said, would you say 50 cents for 6 months of storage? That they're going to have to, if someone's going to have to pay that farmer to store that bean. And so that's really going to change the dynamics quickly.
And the farmer needs to look at that dynamic because if there's a strong carry in incentivizing selling down the road, think about that before you pass on that, just waiting for the market in general to pick up.
So inflation has become that word in our vocabulary that we've dealt with a lot in recent months. How would you gauge this global economy? China's had some challenges. Obviously, we've seen our interest rates rising. What's your take on where we are, the economy globally?
Yeah, I think you can, I mean, obviously cotton doesn't affect you guys here, but you can look at cotton, for example. You tried to make a run in cotton, but when everything comes down to it, China's just not around for as much as they wanted before, and those concerns weigh on the market. And I think if we push this along enough, and you start to have a decent start in Brazil for soybeans and a decent start coming forward for corn, that's going to be China's first desire for their crop. And so if their economy is not as great, if they don't want as much product, and their first choice is Brazil, that could be problematic for us.
The world's in a challenging position right now. We don't see prosperity when energy prices blow higher. Certain countries see prosperity. We as a nation, the world. Inflation, higher interest rates, none of those things lead to job formations. So I think the world's kind of tough. Now, here's the silver lining. So we talk about China. China's in a tough economic spot right now. So there's two ways to look at that glass, half full or half empty. The half full theory is they're on a downward trend. They've seen their better days. But China for the last 6 to 12 months has been taking very stringent and strong stimulus action. You don't see that right away. So 3 months, 6 months, 9 months from now, if all of a sudden you see a big influx of money from China coming in to buy commodities, it shouldn't shock anybody. So the world's always dynamic. I just worry that in general, each individual consumer is just going to consume a little less. And we talked about this down the beef market. We talked about high prices. Well, beef's gone up with everything else, but as soon as the consumer really starts getting pinched, I think that they go to the supermarket and they pick up the beef and they pick up the chicken and the pork and they put the beef down. And that's how that affects prices. So I'm worried the world's headed more towards slowdown. I don't know about world recession, but just slowdown, stagnation, stagflation, whatever you want to call it. I'm not a bull on the world economy other than maybe the worst might be behind us and I don't see it.
We're a half hour into this conversation, having brought up Russia and Ukraine. Are we just tired of talking of Russia and Ukraine? I mean, they're obviously nothing's moving out of the Black Sea. They're trying to find different maneuvers on the Danube, but the conflict is still in play over there. What's your take on that part of the world?
Well, I trade a lot for my own account at night, and every headline for a long time has been a massive selling opportunity. And we spike up at night on these headlines or Sunday open, but all those levels were much higher levels. In the world, you know, Russia's still producing plenty of grain. Everyone's just pretending they're mad at Russia and not going to buy it, but they're buying it in a big way now. And Ukraine, it's amazing to think of how much they produced and how much they exported, and that's a good chunk of that's went away, but the world adapted. I mean, what Brazil and Argentina and what we're doing, they're not really in the game right now, but somehow, either because the price went so high that people couldn't afford it, or the cost of money so high they can't spend the money on it, but all the things like, well, if Ukraine's out, we'll need to produce this much more. A year or two ago, domestically, if all these crushing plants are coming on, we're going to need 12 million more acres of beans. We don't need 12 million more acres of beans right now, and the crushing plants are coming on. So the water seeks its own level is happening. Now, the worst part of that is if and when the Ukraine ever comes back on full boat, whether Ukraine is now Russia or Ukraine's Ukraine, or the rate we're going, Ukraine's going to be America if we keep sending them any more damn money. But they're going to start producing grain again, and it's going to flood the market with grain. So high prices got a lot of people. We say we're fringe acres. There's a whole group of fringe acres in the world who came in the market that the only way to get those people out of the market is to take the cost so low that they can't afford to produce that anymore. And that's a scary thing to think about. While interest rates have tripled, it's really the trifecta that if you're an American farmer and you have a low yield, an interest rate that tripled, and a price that's lost 30%, you'll go backwards quickly.
I think a concern was that it brought so much attention. You wanted so many people to be involved in wheat. I mean, everyone thought it was going to go so much higher, and the whiplash behind it. You get a friendly story. You see that Russia maybe came out here and bombed some grain facilities right on the port, all of that, and you're like, this has got to make wheat go higher, and you have that initial buy. But then the next day and 2 days, they take it back plus some. And I think that whiplash of wanting to be part of a friendly story, but it doesn't pan out, took people away from the market. And so I think you just don't have those people wanting to partake in it because there's too much risk on the table. What kind of news could come out tomorrow?
You look back in time, and Ukraine was like the breadbasket. I mean, it's very fertile soil. It's a very productive piece of ground that we've got. With the infrastructure that's been destroyed, and we're going to be picking bombs out of fields for a long, long time, it's going to take some time to get them back into production, isn't it?
Absolutely. I believe the statistic was Ukraine had 14% of the world's most productive ground. So like what we have here in the Red River Valley, they have that. And it's definitely knocked out. I guess you could see it from the satellite images. But there's still ground, maybe not in America, but in Brazil, Argentina, other countries, there's still ground that can be farmed. And when you shoot up the price of wheat to $14, you're getting to the point where you start ripping up front lawns and you're planting wheat. I mean, it will get planted somewhere. If every American didn't have a lawn, we would have a lot more acreage, right? If you keep markets at that high, you're asking to rip up the lawn. Not that it really happens, but I will tell you one story where I live. There was this cute little house on the corner of Route 30 in Valparaiso, Indiana, and there was 14 acres of pasture, and they always had horses. And last year they had soybeans. They sold it. Whoever bought it said, heck with the horses. And it had 14 acres of soybeans last year, and it had 14 acres of corn this year. And I was laughing. I'm like, whoever owns that was out of horses and back in production grain. And for 20 years, I drove by this little field. It never had grain in it. It was just a couple horses running around and some pasture. And I should ask them what changed your mind, but maybe they hate horses.
What's happened to the horse market? I don't know.
Well, Don, I just had some numbers here. So in 2021-22, Ukraine produced 42 million metric tons of corn. So that's roughly 800 million bushels. And last year dropped off 27 million metric tons, and the USDA has actually increased for next year to 27.5. So the thing has stabilized. But the thing that kind of go back to the markets and what we all need to kind of remember about history and learning is the markets also move on perception. So when the war is happening, there's an uncertainty. The perception is we could be really short of wheat. What's the world going to do? And it gets back to that high prices cure high prices. People figure out how to do. And so what became more and more evident is the managed money was looking at this saying, this wheat is too high priced, the world can't afford it, it needs to come down. They were on the forefront of selling these rallies, anticipating that ultimately, while wheat flow from the Black Sea would be limited and maybe production limited, it's likely not a long-term vision, and it's also likely within 24 months you're going to see the world increase production elsewhere. So again, the focus goes back to the Southern Hemisphere and the ramp up in production that they put forth to meet that void. And that's why the managed money has been sellers in wheat. They've been sellers in corn. Not so much of beans, they're still long beans. Beans are a tight supply. That's a whole different story. We could talk about beans.
There,
Turn the mic on.
put it on. Here we go. Try this again. Okay. Ending in soybean production this year. So they've got land they can bring back into production.
Yeah, I think Brazil is going to take every acre that they can and get it planted. And, you look at it, they actually moved up their plant date by 2 weeks. And I don't think that necessarily makes like a world of a difference when you look at it. But I think what it does is just giving that ability of saying, hey, if these farmers can get in early, they obviously see the conditions well enough that they can get in a little bit early. That means they can get it off earlier and get corn in there earlier. And so I think their goal is just they see how much agriculture can support their country. They see the writing on the wall with their relationship with China. And so I think they're really going to take everything they possibly can, and they can grow a really good crop.
Chris keeps cutting out. But you mentioned earlier when you were talking about Ukraine, the markets went through a really big whiplash period. 5-10 years ago, you didn't see the markets move in such big spreads before. Is that the new normal? Are we still experiencing some whiplash effects?
Yeah, lately, like my job's been kind of boring, to be honest. Like I feel like these markets haven't been movers, and so I think you get that ability. And I think one of the biggest things is I can't stress this enough. You guys should all be placing orders at your elevator or in your account because so much movement happens overnight trade. And so you now have so many different people having such ability to a liquid market that it just brings all these people in, and you can see those higher swings, especially looking at crop reports that happen during trade. You're looking at that information that comes so quick, and the emotion of missing out on something, missing out on some form of emotion. I think that just brings such players to the market, and you see so many outside influences. You're going to continue to see that as we progress further and further with computer trade. I just think that's the writing on the wall.
I've been reading markets for 40 years, and there was a time when if markets moved a half or a quarter cent or a half cent in a week, it was that was it. I mean, there wasn't a lot of movement in those early days. In the last few years, it seems like black swan events have become our norm, whether it was COVID or Russia invades Ukraine or a trade war with China. Are there other black swan events you see that we should be alert to from a farmer's perspective?
I mean, the obvious one that no one wants to talk about is that we're just going to massively overproduce. And I think we'll look back in a few years. Obviously, the interest rates, it's obvious that they're higher, but we don't know our interest rate's is operating to be 10% for 3 years, or is it going to go 10, 8, 6? That's going to play a key. But I think we'll all look back in this room in a few years and say, I wish the Ukraine war wouldn't have happened. It was really the devil. I know we made a lot of money that year, but every time prices go higher, it introduces a group you don't want in your marketplace, and they're there and they're not going away. And it breaks my heart because there's like traders like myself on the floor. When times were good, even the dumb traders made money. I don't know where I was on that, on that shift of that, how they measured it, but you could always tell, like when you met someone who was a trader for 40 years, you're like, I wonder what they did to stay in the game. And the job of the market, whether you're a trader or farmer, is to knock you out of the game, whether it was the interest rates exploding in the 80s or what's happening now. But I think we'll look back and really wish the Ukraine war wouldn't ever happen. And from a futures and options standpoint, for what I do owning a seat, when the Ukraine war happened, the owner of the clearing firm called me and said, do you get everyone out of wheat calls, wheat this, wheat that. And there was a trade that happened from an exchange traded fund. They rolled, and I mean, looking back, the prices you could have sold were crazy, but we were being told from the owners of the firms, like, do not initiate these trades because you may not be able to get out for weeks. And so when you create a panic and you go up like that, you you invite a bad person to a good neighborhood, and that person is now in the world grain market, whoever that person is, right? That group. You don't want them there, but they're in our business now.
Yeah. Volatility we talk about here in this conversation, volatility, you've told me a lot, creates opportunity, right? Farmers there should be some things we
Right.
like
So-
about volatility.
Well, to Christie's point, the reason I stay up late in my underwear on a Sunday night and trade, it's not a good picture, but if you want, I'll send you one, is that
Please.
2,500 elevators aren't open. There's about 2,500 grain elevators in America, right? They're not open. But at 12:30 at night, when beans are up 40, I can sell futures. I know doggone well when the farmer wakes up, calls the elevator, places in that sale, and we go on our biscuit break, we're going to close at 7:45 in the morning. The flush of sell orders, which is the natural selling, that's what Christy's like, you really should have your orders in at night. I know that. I'll tell you one time to have your orders in at night. If you're not going to sell it at night, I'll sell it for you in my own account, but I'm not giving you the money. And I have made a damn good living selling grain at night that I don't even grow because I understand the mechanics of there's a day session, a night session, China comes in. The opportunity to sell at night is great because once the market goes up, the natural seller is no longer there. So once we clear out the order book, there is not another level of orders because people have to wake up and go through they have to call your friend at the crushing plant,
Yeah.
selling you 10,000 beans, that hits the board, and this natural flow stops. So it's nice the markets are open at night, but it's also a curse. So you either get involved and start participating in this stuff, or you sell it 20 cents lower on the open. Those are your choices.
Christy?
Back to me. You're selling it back to me.
I'm not sitting on a Sunday night, but watching the markets. But,
Your
no, I'm
kids
kidding.
are running around with no clothes on.
Yeah. So, yeah, the volatility is a big part of the market, and volatility definitely gives opportunity. I agree with that. It's frustrating at times, but it's a friend when you want it to be a friend. Right now, there is not much volatility in the corn market, and so I think that's one thing you're looking at. I'm going to spin this kind of in a different direction, but I think one thing you're looking at right now, and I think one of the most important things is if you have an average crop, like an APA average crop in corn or lower, I think that you should be utilizing calls to be protecting the chance of losing an insurance payment. Seasonally, towards the end of September, we typically, I think you were talking about that, we typically find our bottom in corn, and we're going to generate this harvest price through the month of October. And if you're looking at having that coverage, if you're looking at having that protection, corn options are really cheap because everyone's looking at corn carryout right now and saying, how are we going to dig ourselves out of this hole? And so there's not a lot of people that want to be buying these calls right now, and I think it's a great tool to be using and should be considered when you're talking about like your marketing plan as a general, and that needs to bring that crop insurance in, that harvest price, and right now the volatility is not there, so they seem awfully cheap to me.
The topic was volatility, right? So yeah, some good things said here. One of the things that volatility does is it creates an environment where high prices do eventually cure high prices. So if we just go back over the last 15 or 20 years, or even further, go back to 95. I've been doing this 34 years, and you watch when we have these events. Usually it's 2 or 3 things that happen, and it blows the market up, and then we have what they call the long tail. So you have a long tail. So the thing to remember in those environments is that when you're looking out at that long tail, it's not intuitive that you should be defensive or selling, but on certain percentages of the crop it is. So those of you who looked out at last year, a year ago in October, we saw 630 corn on the board. Think about the value proposition, not about whether the market can go up or down or that you sold corn the year before at 630 and it went to $7 or $8, but the value proposition dollar per acre. So I always encourage people to think about that, and then think about all the different tools that you can utilize other than just your storage or a forward contract. So kind of bring that level of education up or knowledge up, because there's an opportunity. Tommy's talking about trading at night. That's an opportunity. If you're a farmer and you have your price orders in and the market blows up at night and by morning it's made a bearish key reversal downward, there's no way at 2 in the morning you're sitting in front of your screen making a decision to sell. But if you have your order in to sell and it gets triggered and you can live with that price yesterday and you can live with it today, you certainly can live with it tomorrow. So a lot of things to sort of be learned from the last year and a half. And then the other thing would be, kind of keep an eye on the money flow into the marketplace. Who's in the market and what are they doing and why? And I think that's a big thing. I want to jump back to soybeans. So I said we could talk about soybeans. And these aren't gospel, but when you look at the weekly crop ratings, I'm going to give a little bit of a bullish slant in soybeans. 18% of the crop is rated poor or very poor. So in theory, as you drive past 5 fields, one of those 5 fields is not in very good shape. Carryout is 220 million bushels. The USDA has lowered export projections 145 million bushels in the last 3 months. So just think about if they didn't lower that. And think about if the yield is actually a bushel lower. So we could have a lot of volatility in the soybeans. And so my message here is think strategically. Beans are always $1 to $1.50 from somewhere. And they could just as easily go down $1 or $1.50 as up. So think about strategically, if you're asking me about what to do with beans, I'd say if you've got a good looking bean crop and you're sure you got something there, I'm a seller of beans. And I'm a reowner of beans on March with a strategy, we call it a bull call spread, but I want to keep balanced. I don't want to try and outguess this market too much right now. So,
Got some livestock folks in the crowd too. How high can this cattle market keep going?
Go a little bit more. There will become a point though where the consumer eats less beef, world consumer and everything else. And so when it comes to grains, everyone's focused on the yield. When it comes to cattle, everyone's focused on how low the inventories are, but it'll just happen that the consumer gave up, right? And markets can do incredible things. It's been so much easier to talk about markets since crude went to negative 39. I can tell you cattle can go to any price it wants to, and those margin calls will have to be met. But the story will end poorly, but it's a different set of economics, where you have crops, where you have American crop, South American crop, European crop, Australian crop. The world cattle market's not like that. The economics take so much longer to move. Whereas hogs, you can breed them, produce them, process them so much quicker. It's a much longer game in the cattle game, and I just don't know how it ends. I'm very cautious. That's all I could say. Folks we have who are short futures have made margin calls, not the last few days, but the days before that. Remember, my wife's like, this guy are on margin. Sure, they own cattle and they're short the board. We'll see how it ends. I don't know how the story ends yet. I'll let you know.
Yeah, the fundamental.
After it's over.
Right? The fundamental side of cattle is not going to change anytime soon. Like the tight numbers aren't going to change anytime soon. So the market's got that in there. And now it all comes back to cash trade and consumer sentiment. And some of the hard thing for us, right, around here is that we can't imagine not eating beef, right? Like we live in this section of the US that we can't really imagine changing our diet all that much based off price. We are a small section of the United States. And so you do need to pay attention to when you see the general sentiment, when you're looking at, box beef cutouts, all of that. I think that's going to be one of those first signs. But I think when you look at the cattle markets, this seasonally is very tried and true that August 1st comes and live cattle and feeder cattle drop very significantly. Feeders through the rest of the year and then live cattle through about this time frame. We have not seen that this year. And so if we can get through seasonals, if we can get through that seasonal selling and kind of stabilize here, I think that's great. When you look at a chart, I think you're looking at the cattle charts and saying as long as we can keep trend line, and you're looking at this trade and keeping trend line, as long as we can keep that, I'm going to give the cattle markets a little bit of wiggle room. But when we start to break that, that's when I'm going to get a little bit more concerned about cattle in general.
So there's a few things going on. So if you look at price charts, cattle have been in a steady uptrend for month after month after month. Corn prices, wheat prices have been in a steady downtrend month after month after month. So the market is telling the cattle producer, get ready to hold back heifers, and that'll help put the last push probably in cattle prices over the next 1 or 2 years. What still concerns me and why I would encourage cattle producers to purchase put options is that we talked about black swan events. I still get concerned about this economy. The Federal Reserve, I thought, was not only asleep at the switch, I thought they were intentional not raising interest rates fast enough. And the horses got out of the barn, and now they can't raise them fast enough, and they keep getting one excuse after another, supply chain, this, that, and the other thing. The reality is we're at higher interest rates. Checkable accounts prior to COVID went from $2 trillion, checkable accounts are basically savings accounts, to $6 trillion. In theory, all of that is gone. The consumer has gone through all of the money, the stimulus money, they've gone through the COVID money, and now you've got 64% living paycheck to paycheck. I'm very concerned that with energy prices up, that food prices have risen to a point where they're going to tip over because of lack of demand. And we're just going to eat less things like beef, more pork, chicken, things that are cheaper. So I like the puts. I like the idea that the market is finally telling producers to expand and grow. But there's a demographic problem, and that is our cow-calf operator, average demographics, 58, 59 years old. You've got to get a younger generation into the cattle industry, and I don't know if the economic incentive is there yet for them.
I'm looking at the clock. It's been a great conversation. Can you give me 30 seconds of what's your take-home message? What's these guys, as they leave Big Iron today, what should be on their mind?
You should be optimistic. North Dakota, Minnesota, anywhere around here is a great place to farm. The future, the marketplace has changed. You may sell to someone different, but things are still really good. They're just not as good, and you're going up the treadmill. So if you walk on the treadmill every day at 2% incline, interest rates are 10% incline, it's going to wear you out. Stay ahead of that interest rate.
Christy?
Yeah, I think the biggest take home right now is focusing on what needs to be delivered right now at harvest. Focusing on that. If you have HTAs that are not being delivered at harvest, there are some great carries in the market to be able to roll out those carries, and really strategically thinking about interest rates, cash flow, when you want that. And I do think that, just because you can put your crop in the bin doesn't mean it needs to stay there for a really long time. And I think you're going to have some good opportunities sooner rather than later this year.
Short-term balance in the bean market. We've got prices to work with. Beans are closer to the high for the year than the low. Corn's closer to the low. So I'd be balanced there. I'd be patient with corn sales, but it goes back to the depends question, your storage availability and those type of things. I think big picture perspective, we're always going to do this when we have bull markets, is to look back and wring our hands on what we could have done or should have done. Again, pivot point, find a price that you like, put your orders in. If it hits, live with it, and then start building an average off of that. And if you want to be more strategic, talk to somebody about how that can happen. We've got a lot of homework in our office on a lot of math-based type things that tell us historically when and where. So those are all things that can help aid in making a decision and working toward building a weighted average price.
Absolutely. Well, thank you to our panelists, Brian Doherty from Total Farm Marketing, Christy Van On from Van On & Company, and Tommy Grisafi from Advanced Trading. Let's show our appreciation.